Good afternoon, ladies and gentlemen, and welcome to the TRANSENSE Technologies results presentation. To start with, if we could cover a couple of housekeeping items. Before we begin, we would like to submit the following poll, which you will see on your screens. Throughout this presentation, investors will be in listen-only mode. However, questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen, or if anyone has dialed in via transense@warburgpr.com. The company may not be in a position to answer every question it receives today. However, the company will review all questions submitted and publish responses where appropriate. These will be available via your Investor Meet Company dashboard. Finally, I would like to remind you that this presentation is being recorded. I would now like to hand you over to Executive Chairman Nigel Rogers and Chief Financial Officer Melvyn Siegel.
Hello everybody, and welcome to the session. Looking forward to bringing you up to speed with events at TRANSENSE with our final results presentation for the year ended 30th of June, and obviously we'll cover current trading since that period as well and talk a bit about prospects for the business. And I think we've got a very good story to tell. I hope you enjoy it and look forward to your questions. I'm just going to start with an overview then of the presentation that we're going to make today. To sort of orientate people, we've got a solid set of financial results here. Melvyn's going to be talking about strong revenue growth and a very robust financial position. We're then going to move on, and Melvyn will first of all talk about the TRANSLOGIK TYRE probe business, and then I will talk a bit about the development of the ITRACK royalty stream within our business, both of which have been doing very well, building market share, and lots of scope for further development of those two income streams going forward. And then I'll be talking more about our SOAR technology and the development of the marketplace and our market sector focus in that business. And again, I think we've got some very strong information to give you about the development of our pipeline and the level of customer engagement in that business. And then we'll talk right at the end a little bit about investor relations and our buyback program. Mark, if I could just ask, I think if you could just kill the cameras, it would just enable me to read the presentation a bit more clearly on my screen, please. Okay, I'm going to hand over to Melvyn now, if I may, just to talk through the figures, and then we'll get on to talking about development in the business.
Thank you, Nigel. Good afternoon, everybody. First page is the financial highlights. And I think the highlight generally is that all dials are pointing in a positive direction, showing strong growth in both revenue and profitability. I won't dwell on the revenue numbers because I cover them in the next slide, but you'll see the profit before taxation has moved from a loss last year to a profit this year, and the movement is 430,000. Not insubstantial. Earning per share has jumped up from 0.96 to 5.36, and the cash equivalent, there's no depletion in the cash, whilst we have spent 300,000 on treasury shares, which are shown on the next line. And finally, we've got the distributable reserves, which continue to grow as we generate profits. On the next slide is the results bridge, which tells you how we got from 156,000 last year profit after tax to 877,000 profit after tax this year. The total income increase, which is the first three green bars, is £830,000, and that's made up of net royalties, which have grown nearly 90% to 725 contribution. Probe, which has grown 16% to an increase of 99,000. And the SOAR business, which has grown 11% to an increase, of 22,000. In overheads, we have increased overheads by 389,000. And part of that was a planned increase in headcount. There were 4 more people, and that accounts for about 60% of that increase. Other expenses have marginally increased, and the tax number has increased by 296,000, which reflects the movement from incorporating deferred tax looking forward 2 years as opposed to 1 year. And the sum of those different bars comes to 877,000, which gives us the figure for the year. Looking at the next slide, we have the strengthening financial position, which is demonstrated by the balance sheet. I'll have a look at 3 of those boxes. First of all, the first box, deferred tax. I've mentioned that before. The deferred tax credit was about 640,000 out of interest. If we would have brought in a deferred tax recognizing the full losses that we have, which is about 22 million, that number could have been 4.2 million. The cash balance unchanged, as once again I mentioned that despite investing 300,000. What is important to note is the quarter royalty to June 22, which was paid in July 22, totaled $560,000. So that effectively replenished the bank account and took it up quite substantially. Finally, on the share buyback program, as announced today, that's been restarted, and Nigel will cover that at the end of his presentation. On slide 6, we have the cash flow, and what I'll focus on here is the net profit was 880,000. The adjustment for non-cash items was 260,000. That's predominantly the deferred tax, less depreciation and amortization. That gives you a cash contribution of 620,000. And as you can see quite clearly from that slide, you can see where that's spent in working capital movements and in share buybacks. Moving on to the next slide, which is the financial dashboard. Once again, this kind of reinforces what I've been saying, that the growth in the various parts of that dashboard, the growth in income, which is reported by segments, the net profit before tax growth, which has moved from a loss to a profit. You can see that quite clearly. The substantial growth in earnings per share, and then the growth in cash when you add the treasury share purchase to that. What I want to add, which is not on this slide, but I think it's important, which is most of this presentation looks at historic numbers and the current opportunities. I want to look forward now, and the way we do that is by looking at the excellent research note that Ian German has prepared, which covers 2 main things. One is he's done a net present value of ITRACK, which Nigel will cover in due course. I want to just look at the FY23 numbers that are in his research note, which for those of you that don't have it in front of you, show increases as follows: turnover 2.6 million to 3.6 million, GP from 2.2 million to 3.2 million, and EBITDA from 0.6 million to 1.4 million. We have, since what I regard as the rebirth of TRANSENSE, i.e. when we did the Bridgestone deal at the end of June 2020, we have as a board a 2 from 2 record of achieving our numbers in the market, and we even had an upgrade in 2021. So to achieve 3 from 3, looking at the challenges or the headwinds, as I would refer to them as, we have the global economic climate, which everyone's aware of, and then we have the challenge of getting components. From our perspective, we've managed that component issue very well, and it hasn't affected the business. And as far as I'm concerned, the global economic climate, the main impact that has had on TRANSENSE is on the share price. Performance-wise, it hasn't affected our performance to date. Looking at the other side of that coin, the tailwinds, there are many. Firstly, we have an extremely strong team in place, where we've introduced Nick Hopkins to the board as our COO. We've brought in Ryan Moore, who was part of our SORCAP, and he's now our Business Development Officer. And we've also added to the SOAR team, Andy Bullock, as our Chief Technical Officer. So very strong team in place. We have a very high quality customer base. throughout the business, not just the saw side, through the probe side, and obviously ITRACK through Bridgestone. We have a growing momentum that's been demonstrated by the graphs on this page. We have a tax-free profit effectively till we soak up 22 million of old tax losses. And we have a pipeline that is actually full of opportunities. So all in all, an extremely positive picture. Now we're going to move on to one of my favorite topics, the probe business. I could say an awful lot on that, but I don't think Nigel will be very pleased because he's got quite a lot to say on the saw business. So I'll try and keep it as concise as possible. I'm sure you'll all remember back when TRANSLOGIK were able to sell the ITRACK business, and it was able to do that as the ITRACK business was perceived as the best in market. Likewise, our probe has achieved that status too when it comes to measuring tread depth, tire pressure, which it does by way of either a hose through the TLGX1 or 2, or more sophisticatedly through remotely reading a sensor, which it does through the TLGX4 probe. It also reads RFID tags through the TLGX3 probe, which are, the tags are embedded in the tire for both audit and stock control purposes. And it shares that information by Bluetooth to a fleet management system or a simple PDA. This has resulted in TRANSLOGIK partnering with 4 of the global tire manufacturers. And if you look at the bottom, you'll think, well, he can't count. There are 3 there. The one that's not there is Pirelli. And they use the probe extensively as part of their fleet management system. Whilst the probe is an off-the-shelf product, there's an element of bespoke work aligning it to the fleet management system, and this further embeds us and embeds our business with those tire manufacturers. We also supply the probe to distributors who in turn supply the tire manufacturers in areas we do not have a direct relationship, or the tire company prefers to be supplied by a local supplier. Again, this enhances our opportunities. Moving to the software houses, not all trucking businesses use the tire company's proprietary fleet management system. So we've started working with software houses, and this is an expanding area where they have approached us to use our probe as part of their systems, a little bit by saying there's Intel inside. Finally, we are starting to work with hardware companies who will use our probe to measure their developed tire sensors. And this once again facilitates further expansion. It's true to say we do not know the size of this market, pardon me, but it's fair to say it's many, many times higher than we believed it to be a few years ago. Before I get to the supply chain challenges, just looking to a couple of other points, the gross margin has increased by 5.3% to 55.7%. Revenue is up by 16%. And there are 2 reasons for the margin to have increased. One is the changeover to the TLGX range, which I mentioned in my opening comments. And the other reason is the FX impact. And as you'll see from that little pie chart on the left, the UK, which is the grey part of that pie chart, counts for a very small slither of that pie. The bigger parts are the yellow part, which is the EU, which is mainly paid in euros, and the 2 blue and orange parts, which are mainly paid in dollars, and they have had quite a good impact on our gross margin, and I would expect it to increase further in FY23 to around 60%. Looking at the graph at the top left-hand side, that graph shows the consistent growth over 4 years, and the x-axis should need to be rebased for FY23. The opportunity pipeline is currently very full, as I said, and there are opportunities, the size of which one single opportunity could generate around 50% of the full-year research note forecast. A very positive outlook for the probe business. And on that note, I will hand you over to Nigel to deal with ITRACK and SAW.
Thanks, Melvin. So what we're looking at here is the graph of the development of the ITRACK royalty receipts since the date of signature of the agreement back in June 2020. So you can see there just over 2 years of history. And the staircase that you see here is the numbers which are in the research note in the marketplace as being our targets to meet market expectation in each of the first 3 financial years, FY21 in blue, FY22 in yellow, and then FY23 up in the top right-hand corner. And as you can see, the progression of the annualized royalty run rate there has climbed the staircase at pretty much the forecast gradient. And the significance of the 2 lines there, the red line is the US dollar amount in which the royalties are actually denominated, and the green line is the sterling equivalent. We started off this royalty stream at a sterling equivalent of 125. Sterling then strengthened up towards 140, so the sterling green line started to drop below the dollar line, but obviously that has reversed and will continue to, I imagine, climb with the events over the last few days. So the royalty has more or less grown in line with our expectations, and I'm going to talk a little bit about the future, but first I'll just touch on the FX. During the current financial year, we began to take advantage of the strengthening dollar and start to sell our dollar income stream ahead of time in order to be able to secure rates. As of a few weeks ago, we secured 80% of the FY23 royalty income at an FX rate of $1.20 to the pound on average, which of course looked like a really good deal 6 weeks or so ago. In this new world of Trussonomics, then perhaps there's a touch of seller's regret, but on the other hand, there is also certainty over the translation rate for FY23. And who knows where sterling will be against the dollar by FY24. So we have been able to secure good rates at a more attractive rate than the outset of the royalty. Now, Melvin made reference to the Allenby Capital research note, and I'm conscious that some shareholders may not have seen that. If you go onto the TRANSENSE investor website and follow the link for investor research, then you will eventually find yourself on an Allenby Capital page from which you can obtain the research note that we're referring to here. Any difficulties with that, then feel free to email either the company or Walbrook and we can help you to find it. But what you will find in that document this time is that for the first time, we've really got sufficient of a foundation now to begin to start extrapolating what's likely to happen over the 10-year life of this royalty stream. And in the note, Ian German, who's the analyst at Allenby Capital, has made the assumption that this staircase continues on the same gradient for the first 5 years of the royalty, so a further 2.5, 2 3/4 years from what you can see on this map, continuing to grow at roughly the same gradient. And then between years 5 and 7, and then between years 7 and 10, in addition to the royalty rate per installation starting to reduce, he's also assuming that the growth rate in the number of installations begins to mature and plateau. And he has, in that note, then translated that into a future cash flow stream, which if you discount back to today's value, comes out at around £15 million of future royalty income in today's money. It's about £20 million gross. That equates to 93.5p a share value today, and is a clear indicator that the current share price for the entire company looks substantially undervalued compared to that one income stream. So that's our 2 fully commercialized businesses, ITRACK and TRANSLOGIK Probe. Let's then come on to the SAW business, which of course, long after the life of the Bridgestone income on royalty has finished, then SAW will be the core business and the main earner of this company. And we've spent now fully 2 years since the Bridgestone deal evaluating the market opportunities for SAW. Originally, using our commercial advisory panel, we were sort of opening out industry opportunities and wanting to speak to as many people in as many different sectors as we could to evaluate what opportunities are out there. But the last several months has really been much more of a case of honing down and focusing on those areas where we are seeing real value opportunities. And what I want to discuss now is 3 particular market segments where this value creation cycle, which you can see on the left-hand side of this page, are really present. So I'm just going to start by looking at what actually generates value for this technology. First of all, in the top right-hand corner of that circle, technology fits unmet need. Nobody wants to buy a solution to a problem that they haven't got. And so first and foremost, we've been identifying areas within high-value industries where the measurement of torque or temperature or pressure or a combination of those 3 things can solve a problem which is otherwise insoluble. And leading through round that circle, having found that we can solve that problem, can we do it at a cost which is justified? So, for example, is the client able to save money elsewhere in their system by using our technology to make a cost saving? Or alternatively, can they charge a premium price for their system because of the extra benefits which the cost of the SAW technology adds to their system? And assuming that we're able to meet that cost justification, which in these industry segments we found strong opportunities to do so, then we have engaged with the market in a meaningful way in order to speak to as many potential customers as possible and to secure an endorsement from 1 or more customers within these market sectors to say this technology actually has something to offer in our space. That then leads to the development of applications and fully paid, fully funded development projects to look at technical feasibility for the technology and lead towards full commercialization. And essentially, that's the cycle which we have been engaged in. And that has led us to 3 very interesting market areas, each of them individually very large and with some extremely attractive customers. And I'm going to talk about those now: aerospace, electric motors and drives, and industrial machinery. I'm also going to touch on performance automotive, where many people will know we already have existing business. So let me first of all talk about aerospace. Firstly, in the aerospace sector, engine torque is already measured. There are already many large customers, many large companies in this space who are producing systems to measure engine torque in aerospace. And it's an important feature in safety and the integrity of control and reliability within the aerospace industry. So measuring torque is not new to aerospace customers, but measuring it as accurately as you can with a surface acoustic wave sensor, and doing that in a way in which is extremely rapid in terms of its feedback to the engine control loop, is somewhat more differentiated within this space. Also importantly, our sensors are very compact, they're very rugged, they're small in size, they're light in weight, so they lend themselves to aerospace applications. They're also able to compensate for temperature changes, so they can measure torque in conjunction with temperature, and also measure torque in an area where there is high magnetic or electromagnetic interference. So some very strong advantages for surface acoustic wave sensing within the aerospace sector. Clearly, that's already been proven with the relationship with GE on the ITEP program, but we've now got incoming inquiries from other large aerospace end user customers with specific project needs where they have identified the need to measure torque and are finding it difficult to do so. And so that's led now to 4 active inquiries, 4 active engagements with customers. And I'm going to come on to the pipeline when I finish talking about industry segments, which in turn has led to applications development. We've, during the current year, extended the GE license field of use to cover development work on their hybrid engine high altitude test bed program. So this is a development program for hybrid engines in aerospace. But then also, very importantly and very recently, hot news, we've entered into a memorandum of understanding with Meggitt's engine sensing team based at their operations in Switzerland to explore working jointly to present surface acoustic wave sensing technology to their client base with a view to entering into a license agreement covering fields of use within the aerospace market over the next 15 months. So that's a very valuable relationship to us. Obviously, from TRANSENSE's perspective, Meggitt offer us market access, and they offer us a very high level of technical support. From Meggitt's perspective, then they see this unique technology, to quote the customer endorsement there, becoming a great addition to their engine sensing portfolio of products. So we think a really important and enduring relationship will come out of that. Moving on from aerospace then, I'm going to come on to electric motors and drives, where again there are at least two very key uses of surface acoustic wave sensing within electric motors. One of them I covered 6 months ago when we were talking about the interim results, and that's using real-time actual torque measurement to avoid the use of estimated torque measurement within engine control units or electronic control units for electric engines. And the current sort of state of the art is to use an estimation of the torque output in the engine control, whereas using actual real time can offer some significant benefits because it needs to have a much lower factor of error in the calculation when you have the actual torque measurement. We've recently had a piece of research completed in the desktop which shows that it's going to offer some very significant advantages, and we'll be investing further in that research over the next few weeks and months, the output of which will be a white paper to actually demonstrate how much additional range or additional power that we're able to generate using surface acoustic wave on an electric drive. The second area of great interest in this field is to use surface acoustic wave sensing to accurately measure the magnet temperature within an electric motor. And we think that that will offer opportunities for clients to despecify the material content and save significant amounts of money in the electric motor build by being able to monitor the temperature of the magnet on a real-time basis during operation. So at least two very specific fields of use here within electric motors, which of course have huge utility across a very broad range of industries. That's generating, again, incoming leads. We've got 10 active customers on inquiry in this field, and the first funded project is now underway. Coming to the third target industry, which is industrial machinery, and is obviously quite a broad industry in itself. I mean, I'm including here off-highway vehicles, including agriculture and construction vehicles. I'm also including heavy-duty engines that would be used to drive hydraulic pumps, for example, and also including robotics. So there are a number of sub-industries here. But as a primary industry, again, measuring the delivered torque provides the great opportunity to improve engine control and improve power distribution in order to optimize power usage within a piece of industrial equipment. Increasingly, this type of equipment is being used on an autonomous operation without drivers. So again, providing that extra degree of remote control, very, very valuable. Once again, we're fielding incoming inquiries. People who followed the company for a period of time will know that we have an active ongoing trial with a large producer of agricultural machinery at the moment. That's pretty much come to a conclusion now as far as the technical development is concerned, and the client, as we understand it, is very happy with the outputs that they're receiving from the sensor technology. So now it's a question of looking at commercial feasibility rather than technical feasibility. It works, how much can we charge for it? So again, lots of progress here. The fourth market segment then is performance automotive, where we have a core relationship with McLaren Applied, who have an exclusive arrangement in premium motorsports to sell surface acoustic wave technology. They've been extremely active over the last few months and successful in implementing source sensing instrumented shafts, not only in IndyCar, where we have a good history, but also in a number of other race series. So we see that relationship growing very nicely and McLaren doing very well in that space. Will it be translated into high-performance road cars in higher volume? Well, there's a deliberate question mark next to that. There are certainly cost constraints within that field, which would lead me to believe that it's of a secondary importance in terms of market opportunity compared to the others, but nevertheless, an opportunity exists. So with those four sectors in mind, I'd like to then outline where we've got to in terms of development of the pipeline. And Melvin mentioned the really sort of important appointment of Ryan Morn as our Business Development Director, who's been working with the company in the SOCAP for 2 years, but on a part-time basis as Director of the business now for 7 months. And that really has transformed the quality and quantity of customer engagements within our pipeline. And you can see here since last July, we've got 7 active engagements as opposed to 24, I beg your pardon, 24 now, as opposed to 7 14 months ago. I'd just like to touch on what it takes for a customer to qualify to go into one of these circles. The blue circles are active inquiries. That means the customer has identified a need, that we have the technical capability to meet that need, that there is an R&D budget available for a project to go ahead to look at technical feasibility, and that we have spoken with the budget holder and are aware that it has support internally within our customers' organizations. So there's a lot of noise around the system that doesn't get into the blue box. The blue box is those where that pre-qualification has taken place. They then transition from the blue circle to the red circle, where after an exchange of information on active inquiry, then we move into a funded development project where the customer will pay an R&D fee in order to be able to instrument a shaft and do some test work. And we currently have 3 funded NRE projects underway. We'll be updating the market regularly on the movement on the pipeline. I mean, this pipeline is one of our key performance indicators, and we'll be looking to move as many over from blue to red as we possibly can. We then, in the green box, have those that have satisfied themselves on NRE, on funded development projects, and are in active negotiation to move into long-term contract. And there's one such at September 22 compared to July 21. So this pipeline is really now beginning to grow, not only in quantity, but also, most importantly, in the depth and quality of the inquiries. I would love to know what the annual aggregate revenue of those 24 companies is in the world. It'll be many, many billions. So we have some very high quality customers in there. Of course, servicing customers of that quality also takes technical and operational resource. And we have continued to build out the technical capabilities of the business over the last 12 months in order to be 1 or 2 steps ahead of the customer need. As those funded projects move into our operations, then we will need to have the people, both in terms of number and capabilities, to be able to handle those development projects. So we have been adding quality resource to our technical leadership team and to our operational team, such that we'll be in a position to handle those inquiries over the current financial year as they emerge. And you can see there we've added somewhere around about 200,000 to overhead in the SAW business to be prepared for that. But you will see when you look at the financial forecasts, and certainly as the next 18 months unfold, that we'll be looking to add many, many funded projects to the top of that pipe to begin to defray these expenses and turn our surface acoustic wave into a self-sufficient, self-financing operation. So to summarize, in the first 2 months of this year, our current trading is well ahead of the prior year. I think revenue is about 19% ahead of the first 2 months last year. Yes, the economic outlook's pretty tough in a lot of industries, but the customers that we're engaged with are largely looking for efficiency savings, productivity improvements. They're selling products that are OPEX, not CAPEX, so that, you know, they're not necessarily vulnerable to an economic downturn. And so we think that we've actually got an extremely resilient strategy and a very resilient business model to be able to cope with this downturn. Of course, we've also got a business which is 95% export, so virtually all of our revenue stream is in foreign currency, whereas virtually all of our costs are in sterling. Our ITRACK royalty is high growth, low risk. There's ample opportunity to continue to grow the revenue within TRANSLOGIK through managing very, very lucrative channels into tyre producers and others. The SOAR pipeline is building very nicely in terms of the quality and quantity of customers that are engaged with. We've got a long pedigree of success in partnering with big companies. It's delivered for us in the past, and I'm sure through Meggitt and others will continue to do in the future. And so we think for our investors, the outlook is very positive indeed. With that in mind, and to underscore our confidence in the future, we've already carried out a share buyback program during FY22. We've bought back 300,000 shares, which sit on our balance sheet. They were bought in an average price of 70p. We're satisfied with that. Happy that we did it, and think that that will offer very good long-term value to existing holders. And consequently, have now announced that we'd like to extend that program. We're planning to buy up to another 150,000 prior to the AGM, which is in November. Early December, 1st of December probably. And then beyond the AGM, assuming that we get refreshed authority from shareholders to continue with buybacks, then we plan to buy a further up to £500,000 post the AGM over FY23. You know, I would stress that's all coming out of trading cash flow. That's you know, not dipping into financial reserves. That will be done out of the excess of cash generated by the business over and above that which needs to be reinvested in the business to continue to grow. So that was a lot of information in a relatively short time. I think we've got about 25 minutes left. We'll be very happy to field your questions. I've seen the sidebar moving quite quickly. I confess that the size of the text on my screen means that I haven't had an opportunity to read them, but thankfully Tom Cooper is going to compare for us, so I can listen well and the squint.
Yeah, absolutely. That's fine. Thank you, Nigel. Thank you, Melvin. We do have a number of questions, as you say, but please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. I'd like to remind you that a recording of this presentation can be accessed via your Investor Meet Company dashboard post the event as well, if you want to replay it, or if anyone else that you know wasn't able to attend and would like to catch up on the update. Your feedback is important, so immediately after the presentation has ended, you will be redirected for the opportunity to provide feedback. We've got questions that are both commercial and financial, but maybe we can start with some of the commercial ones. Tom M has said, can you expand on your recently announced collaboration with Meggitt? Clearly SOAR is being well received.
Yes, indeed it is. I mean, yes, I will expand on that. Initially, we were introduced to Meggitt in the US because they're a tier 1 supplier to GE on the ITRACK program. So that was how the original handshake was made. And indirectly, that's led to interest from their engine sensing team, who are based at Freiburg in Switzerland. And we've been engaged in discussions with them over the last several months to help them to understand the application of SOAR technology and the opportunities that we see in the marketplace. And that's clearly attracted their interest, and they're now very keen to work with us to make that available to their clients. So we've agreed a memorandum of understanding which has a duration initially of 15 months. The first few weeks of that will be to prepare materials and begin to put ourselves in the position where we can support Meggitt in pitching that technology to their customers. And then over the course of next year, we'll essentially be gauging the scale of opportunity in the marketplace, working together to effectively produce a business plan to look at what the opportunity is, but then also in negotiation between ourselves, we'll be looking at what sort of fields of use within aerospace Meggitt might be interested in taking a license. And at one extreme, that could be a full worldwide exclusive license covering the entire aerospace sector. At the other extreme, it could be a much narrower field of use for one particular program or another. You know, there's still quite a wide range of outcomes, but there is a very strong meeting of minds at the outset and a lot of confidence that we're going to be able to find a really good solution that'll work very well for both companies.
Great, thank you. You mentioned GE in passing, so a quick question here on GE from Jonathan. I note that the GE license agreement was expanded to cover GE's hybrid electric program. Can you comment as to whether the hybrid electric area is exclusive to GE or is a non-exclusive license?
That's an extension of the existing license to cover only the development program for hybrid electric. So it doesn't cover production. It only covers development. So it's an R&D project and it's non-exclusive. The entire GE license is non-exclusive.
Okay, super. Another one from Jonathan, actually. Bridgestone has a minority investment in a US autonomous trucking company called Kodiak. Does the potential exist for the ITRACK TPMS system to be used in so-called 18-wheelers? Are there any plans for Bridgestone to do so?
I think it would be far too early for Bridgestone to answer that question. I'm certainly not in a position to do that. I think it would be reasonable to work on the assumption that it won't happen quickly, because it would be quite a big step away from the mining sector where ITRACK is currently focused. So I wouldn't have any short-term aspirations, but whether that's something which might be knitted together later, would be conjecture rather than an answer from a position of knowledge.
Okay, super. I'm not familiar with the acronym, but I'm going to read it out to you from Jordan. Can you provide an update on the FETT? Has this been completed yet? Previous comments were that this would be likely to complete in 2022.
Yes, FETT is first engine to test. So that was the first full engine build of the GE ITEP engine to go into Black Hawk and Apache helicopters. And the first engine to test was completed on time in the first quarter of this year, despite some of the setbacks caused by COVID, and the program stayed on time. And that was very successful. It's actually in the public domain. I think it's probably been on our social media channel. It's certainly been on GE's social media channel that it's been completed.
Great, super. A quick one from Richard, and it's more a statement, I think, but it says, surprise power generation is not a target sector. Can you comment on power more broadly, and I guess sustainability is a big item these days? Yes,
it is. I mean, sustainability is pretty much inherent in all of the applications that we're looking at, because the electrification of motors, the opportunities in aerospace are all about getting greater range and greater power utilization for less fuel. Similarly in industrial machinery, and I wouldn't rule out power generation. I mean, within industrial machinery, there is a subset of heavy-duty industrial engines, which certainly would be involved in hydraulics and potentially in the energy sector as well. So there are opportunities there.
Yeah. Okay. There's one question here, by the way.
In terms of the application of our technology, the larger and the heavier the shaft, the more technically challenging it becomes. So we have, for instance, been fitted previously on marine engines, where you have an absolutely huge shaft weighing many, many tons. That's technically very challenging. It's possible, but it's technically very challenging, and that's one of the reasons why energy generation perhaps isn't top of the list.
Yeah. Okay. Just one question here that I'm not going to ask you, but for the person who's posted it, it's to do with the tapering of the royalty, and it's quite detailed. But if I could just ask that person to contact me, then we'll put you in touch on the alumni notes. I think that will detail it far more effectively than trying to address it now. But just turning to the buyback, there are two questions here actually. One from Paul, which is why share buyback instead of dividend, and then also from Mark. Why do you think share buyback is a good idea? Surely investors would be better served with you paying them a dividend. Just tackle that question.
Yeah, I mean, clearly that's something that we keep under review. I wouldn't rule out initiating dividends either in parallel with buybacks or as an alternative way of returning cash to shareholders. The primary reason why we've focused on buybacks first, apart from the obvious undervaluation in the shares, has been that the majority of shareholders, obviously, it's hard to please all people at all times, but the majority of shareholders are focused primarily on capital growth, and many of them have shares in funds where they're enjoying that capital growth tax-free.
Yeah. Okay. And Richard then asks, will you be keeping the bought shares or in treasury or cancelling them?
No plans to cancel them for the time being, keeping maximum flexibility.
Okay, great. A question from Brian, which I suspect is about share ownership by current management. Please describe the current management ownership numbers. I'm assuming that's equity ownership.
Yes. I think out of the board of directors, I'm probably the largest shareholder. I've bought £250,000 shares, I beg your pardon, all bought in the market since I joined the board in 2015. Whenever there's been share price weakness, at the same time as I have not been in possession of price sensitive information, I've taken the opportunity to add to that holding. It gets progressively difficult for me to buy shares when I'm not in possession of price sensitive information, because increasingly I am, because of the number of programs that we've got ongoing. The other board members, Melvin has, I think.
Do you want me to quickly run through it?
Yeah, why don't you? Yeah, thank you, Melvin.
I've got 50,000 shares, which were probably acquired at a average rate compared to the current price of about £6 a share. Rodney Westhead has got just over 30,000. Ryan's got 18, which he's acquired recently, and Nick 5,000, which he acquired recently.
I think just to expand on that as well, all of the employees in the business, including the board, are incentivized by share options, and the majority of the value in the share options is dependent upon a share price of the order of £1.50 to £2. So, you know, we have an opportunity, but a responsibility to drive the value of the business before that becomes worth anything to us. So I think we're extremely well aligned with shareholders in terms of value creation.
Yeah, super. 3 questions from Brian. We'll take them individually. Are you actively addressing the helicopter market where torque measurement is a critical flight control element, i.e. with Airbus, Robinson, etc.?
I'm not going to be specific about customer names, but the answer is yes. Absolutely. It's one of the key areas within aerospace, and one where there ought to be the quickest wins, given that we've already got adoption on the ITEP program.
Okay, second question. Please discuss competition risk in each segment, i.e. are there competitors actively starting to compete and with deeper pockets?
I assume within each segment, he means within each of the industry sectors that we're targeting with SOAR, rather than the 3 segments of our business. That's how I'll answer the question. We don't see any direct competition in terms of surface acoustic wave sensing. We are protected by patents, and we have a great deal of know-how. So whilst there are competing technologies, you know, as I've said, the torque sensing market is something like $5 billion of value a year. So it's not that other torque sensors are, you know, it'd be nice to say that other torque sensors aren't available, but of course they are. Where we have been working hard is to find out where our own system differentiates ourselves from others. And as I've said, that's largely to do with accuracy, rugged nature of our product, cost in certain instances. Sometimes it looks expensive, sometimes it looks inexpensive, depending on what it's competing against in which sector. But then also importantly, temperature compensation, and especially EMC interference. The fact that we can operate in a high magnetic interference area is really important. So other torque sensors are available, other surface acoustic wave torque sensors for the applications that we're looking at. You know, we have a free run whilst we've got patent protection and the know-how that we have.
Okay, and Brian's final question, what are your capital needs over the next 3 years to achieve the objectives? Is the plan to raise debt or issue more shares? You're cash generative now, but
the answer is neither. We expect to generate more cash than we need to invest in the business to take it where we want it to go.
Yeah, thought that might be the answer. Okay, super. So a couple of financial questions, and these relate to the hedging agreements that are in place. Jordan says, how long is the USD hedging agreement in place for? And I'll just combine that, if I can, with a question from Nigel. Being wise after the event, is it appropriate to in future to hedge currency while we are confident we have sufficient revenue? Hedging is an unnecessary expense.
Okay, perhaps you'd like to take the first part of that question, Melvin, and then I'll take the second part if you like. Perfectly happy to, yeah. Or you can, whichever you prefer.
That's very kind of you. The hedging is purely related to the ITRACK royalty. So, and there's a lot of dollars earned on SAW and on the probe business, and they're not hedged, and they have benefited greatly from the FX movement. On ITRACK, I basically looked at 80% of the projected income, which was projected on a fairly prudent basis. And so basically it covers the whole of the FY23, which we mentioned earlier was at an average rate of about 1.2. Being wise after the event, yeah, it is easy to now look at it and say, oh, it was obvious it was going to drop further. I read quite a lot of stuff on currency. I get daily updates from HSBC, who we work with, investors, and it was very mixed signals. And we did the original deal at 125, and we were very pleased at that time to have achieved. I mean, we did it in 2 lots. One was at 122 and one was at 116, hence the average. We were very pleased to achieve those rates. And yeah, hindsight tells us maybe that wasn't the best thing to do, but hindsight is very
powerful. However, to take the second part of the question, as a matter of policy, then I have myself often been a critic of hedging, because exactly the point that's being made by the questioner, that it can be an unnecessary expense, but then insurance is an unnecessary expense as well until your factory burns down. And so in this particular case, bearing in mind that we have a very large, pretty secure and growing income stream in a foreign currency, then as a matter of policy, we did think that it was sensible to start locking in what looked like very attractive rates and giving shareholders a degree of certainty. As we sit here today with the dollar at 107 and having hedged at 120 for the next 12 months, have we got a little bit of seller's remorse? Yes, of course we have. But on the other hand, we're not collecting some of this money and exercising these transactions for another 12 months, and the dollar might be sat at 145 at that point, and we'll be patting ourselves on the back. Nobody knows. Nobody knew that the government was going to change and the new government was going to do what they did on Friday. And nobody knows where the dollar will be in a year's time. But we know that it'll be 120 when it comes to time to cash our chips.
Indeed. And you're a technology company, not a currency speculator. So, yeah, great. Okay, well, that's very helpful. Thank you very much.
The person who was asking the question about the royalty stream has actually put it on in a shorter format, which I can read now. And I'll take that question because it obviously deserves an answer. The question is, where was it publicly disclosed that the ITRACK royalty rate would taper off? The answer to that is persistently in Q&A. When I've been asked granular detail on that, to the extent that I'm permitted to answer questions according to the customer's commercial confidentiality agreement that we are bound by, then I've given answers to questions, as and when they have fallen due. We didn't disclose the full granular detail of every aspect of the agreement when it was first signed. It's perfectly normal to publish a summary rather than publish a full agreement, and that's what we did. I think that summary was fairly balanced in terms of upside and downside, and we've answered questions on it since when we've been able to do so.
Great. Okay, appreciate that answer. So that's and brings us to the end of the questions. Nigel, would you just like to give the postage stamp summary of where TRANSENSE is today?
Yeah, I would. I think we've really found our feet now, and I think that it's fair to say that the prospects for the business continue to build. We've now produced 4 sets of results since the company was reborn in June 2020. Each one of them at least in line with the aggressive growth forecasts that were put in place at that time. And I'm very pleased that we've been able to climb that staircase. We can still see several steps in front of us, but we can see how to navigate our way up them. I think, as a message to shareholders, for those who want to sell, if there are any, then you can be absolutely assured that there's plenty of buyers around at the moment. The company is the buyer of last resort, but plenty of other people out there who would like to take a position and can't. If you're a happy holder, then join the club. You know, I'm a happy holder too. They're in a shoebox under my bed. I don't worry about them when they go down, and I get excited when they go up. But I'm a very happy holder, and I think you can afford to be too. If you're a buyer, then good luck. You know, I hope you can get the shares that you want, but I think you'll find that they're in fairly short supply, and it takes a bit of patience in the retail market to accumulate them in small quantities at the moment, if that's what you want to do. But you know, for those who followed the company for a long time and been patient with this, thank you very much, and I'm sure your patience will be rewarded.
Great. Okay. Well, thank you, Nigel. Thank you, Melvin. Could I ask investors not to close this session, as you will now be automatically redirected for the opportunity to provide your feedback. If anyone has further questions or would like additional information on TRANSENSE Technologies, please do get in contact via transense@walbrookpr.com. And many thank you for attending today's presentation.